You weren't supposed to hear this. And if this video disappears or suddenly stops making sense, understand why, because what's happening right now around Bitcoin has nothing to do with charts, headlines, or what most people think price even means anymore. And that drop to 69,000 wasn't a mistake, it wasn't random, and it definitely wasn't fear the way they're selling it to you, because fear is just the costume this system wears when something much bigger is being moved in the dark. Before we go any further, listen carefully, because moments like this don't repeat often, and most people only understand them after it's too late. So if you want real financial truths they don't teach, hit subscribe and turn on notifications, because what's coming next will change how you see money, markets, and control itself. Right now, the surface story says Bitcoin slipped to around $69,000, down just over 2.5% in a single day, and to most people that sounds boring, almost harmless like noise. But under that number is a message that only insiders read correctly. Because price isn't just a reflection of value, it's a weapon. And when you see a market with over $2 trillion sitting inside it, moving like this while fear hits extreme levels, you're watching psychology being harvested at scale. The Fear and Greed Index didn't fall to 7 because everyone suddenly realized something was wrong. It fell there because fear is being engineered, amplified, and injected into retail minds at the exact moment institutional positioning needs liquidity. And liquidity only comes from one place: your panic, your doubt, your impulse to sell when things feel uncertain, because uncertainty is the lever they pull when they want assets cheap. Bitcoin dominance pushing above 56% isn't an accident either. It's capital fleeing narratives and returning to what the system considers the safest digital collateral, and that should already tell you something important. Because when money hides, it's preparing for a move, not running away from one. And while social feeds scream collapse and chaos, the biggest players are calm, methodical, and patient because they understand cycles, and cycles always punish emotion. Here's the hidden truth most people never hear. Markets don't crash when everyone is euphoric, and they don't bottom when everyone is calm. They bottom when fear feels unbearable, when selling feels logical, and when waiting feels impossible. And that's exactly the emotional state being cultivated right now across crypto, finance, and risk assets as a whole. Zoom out for a second, because this isn't just about Bitcoin. This is about a global system choking on its own debt, central banks tightening liquidity while pretending inflation is under control, and currencies quietly losing purchasing power while people argue over short-term price moves. And in that environment, Bitcoin becomes more than a trade. It becomes a pressure valve for capital that doesn't trust governments, doesn't trust fiat, and doesn't trust the promises being made behind closed doors. But here's where it gets uncomfortable, because while retail investors are being told to be afraid, institutional money is doing something very different. It's slowing down, accumulating quietly, and waiting for the last wave of emotional selling to finish. Because big money never chases green candles. It hunts red ones, especially when fear metrics scream capitulation and headlines feel apocalyptic. That 69,000 level isn't just a number, it's a psychological checkpoint. It's where weak hands question conviction, where leveraged traders get liquidated, and where long-term accumulation zones begin to form without applause or attention. Because the best buying opportunities never feel safe in real time, they feel wrong, lonely, and uncomfortable. Now let's talk about manipulation, because ignoring it is how people stay confused. Whales don't need Bitcoin to crash to profit. They just need volatility and emotion. And by pushing price just enough to trigger fear without breaking long-term structure, they create a feedback loop where retail sells into strength later and buys into weakness now, exactly backward from how wealth is built. Look at the volume. Despite the drop, activity remains high, which tells you this isn't abandonment, it's redistribution. Coins are moving from impatient hands to patient ones, from people reacting emotionally to entities operating on timelines measured in years, not days, and that's the part that never trends on social media because it doesn't create clicks. Meanwhile, the media narrative is predictable: regulatory fear, macro pressure, uncertainty, rinse and repeat, because fear headlines keep people engaged and controllable. And when you're emotionally charged, you don't think clearly, you don't plan strategically, and you definitely don't see the larger game being played above your head. Inflation hasn't disappeared. It's just been reframed, and every rate hike, every tightening cycle, every speech about stability is really about one thing: controlling inflation expectations while quietly devaluing currency over time. And assets like Bitcoin exist because that silent decay is no longer invisible to those paying attention. This is where psychology becomes the real battlefield, because most people don't lose money due to lack of intelligence. They lose it because fear hijacks timing and greed distorts patience. And markets are designed to exploit exactly those weaknesses, especially in environments like this, where uncertainty is high and narratives conflict. When the Fear and Greed Index hits extremes, it doesn't predict price, it reveals behavior, and behavior is what whales study relentlessly, because predictable human reactions are the most exploitable resource in finance, more reliable than any indicator, more consistent than any model. You're being shown charts, but not context, numbers, but not motives, movement, but not intention, and intention is where the real signal lives. because capital always moves with purpose, even when price looks chaotic. Right now, Bitcoin sitting near 69,000 with dominance rising tells you capital is consolidating, not fleeing. And that's a critical distinction because consolidation precedes expansion or contraction, and those outcomes depend on who controls supply when sentiment shifts. Altcoins bleeding while Bitcoin holds relatively strong is another clue, because risk is being stripped from the edges first, leaving a core asset positioned for the next phase. And that phase doesn't begin when fear is loud, it begins when fear is exhausted. Institutional players aren't reacting to daily candles. They're watching liquidity conditions, regulatory timelines, and macro inflection points. And while retail debates whether this dip is a buy or a warning, those players are already positioned for outcomes most people aren't even considering yet. Here's the twist most never see. Extreme fear doesn't mean the market is broken. It means the market is functioning exactly as designed, transferring assets from those who need certainty to those who thrive in uncertainty. And every cycle repeats this process with new participants convinced this time is different. Bitcoin has survived bans, crashes, ridicule, and manipulation attempts far more aggressive than this, and every time, the same psychological pattern plays out: disbelief, fear, capitulation, accumulation, expansion, and then euphoria, followed by amnesia, where people forget the fear and chase price again. But this time feels different because the stakes are higher, the numbers are bigger, and the system itself is more fragile, which is why control narratives are louder, regulation threats feel heavier, and fear feels more intense because when systems strain, they tighten control before they reset. A silent reset doesn't announce itself, it happens gradually, through policy, through inflation, through asset repricing, and through wealth transfer, so subtle most people only notice years later when buying power is gone and opportunities feel out of reach. Bitcoin's volatility is often framed as weakness, but volatility is freedom in a controlled financial world. It's price discovery in an environment where most currencies are politically managed, and that alone makes it dangerous to established systems. So when you see price dip and fear spike simultaneously, ask yourself who benefits from you feeling scared, because it's rarely the person selling calm and rarely the one buying methodically. Technical indicators like oversold RSI levels aren't magic, but they reflect stress, and stress is where reversals are born, not because lines cross, but because behavior shifts when selling pressure exhausts itself. Support zones aren't guarantees, they're battlefields, and the battle isn't between bulls and bears. It's between patience and panic, between conviction and comfort, and the market rewards one far more consistently than the other. Ethereum holding stronger, DeFi activity remaining resilient, and development continuing quietly during price weakness is another reminder that price often lags progress, and by the time optimism returns, the easy positioning is already gone. The system doesn't want you thinking in decades, it wants you thinking in days, reacting to candles, headlines, and tweets, because short attention spans create predictable behavior, and predictable behavior creates profit for those designing the game. This is why most people will never understand money at this level, because understanding requires emotional discipline, and discipline is uncomfortable, especially when fear feels rational and selling feels safe. If you're still watching, understand this. You're not being tested on intelligence right now, you're being tested on psychology. And that test determines which side of the wealth transfer you end up on. Bitcoin at 69,000 isn't the story. The story is who is accumulating while you're being distracted, who is exiting while you're being reassured, and who is positioning while you're being emotionally pulled in every direction. The warning here isn't to buy blindly or sell impulsively, it's to recognize the environment for what it is. A psychological operation disguised as a market, where fear and greed are tools, not accidents. When the next narrative shift happens, when fear turns into cautious optimism and then into excitement, remember how this moment felt, because that memory is the anchor most people lose, and without it, cycles repeat endlessly. The legendary ending isn't a price target or a prediction, it's clarity. Clarity that money isn't just numbers on a screen, it's power, control, and behavior. And those who master the mental side win long before charts confirm anything. So here's the question I want you to answer in the comments. Do you think this fear is real or engineered, and why? Send this to someone who needs to hear it before emotion makes the decision for them. And if you want to stay ahead of the narratives, subscribe now, because the next move always comes before the crowd is ready to understand it.